All right, let's begin, though, this hour with some new inflation data. The Consumer Price Index rose 0.4%. In March, prices are up 3.5% in the last 12 months. The increase was driven by the rising cost of rent and gas. These latest numbers are raising questions about when the Fed will cut interest rates.
A CBS News business analyst, Jill Schlesinger, is joining us now in Studio 57 to break it all down for us. What do these numbers mean? Your biggest takeaway for this morning?
Well, it looks like the Federal Reserve can be very patient and not cut rates anytime soon because we are not seeing a huge amount of movement in the Consumer Price Index. It's not the Fed's preferred measure, but it is still showing that prices are accelerating in major categories. So, like in the month of March, gas prices were up by 6.4% in the month. Even when we take out food and energy, which are pretty volatile, the core rate remains 3.8% higher than it was a year ago. And I think that is somewhat vexing to the Fed. I think this really does call into question whether the Fed lowers rates at the June meeting. Definitely not May, maybe not June, probably not July. Are we going to wait till September? Maybe, but we've got to see prices and the rate of price increases come down.
So remind us, though, is the rate slowing? It had been slowing for a while.
The rate definitely slowed from that 9% annualized pace that we saw in the summer of 2022. So we made a huge amount of progress over the course of, say, 1 year, maybe 15 months. Recently, things have stalled out a bit. You mentioned rents or shelter. Shelter and energy accounted for half of the monthly increase in March. And so those categories seem to be a thorn in the side of the Federal Reserve and to all of us. And look, you're talking about grocery prices. I just want to be clear. Prices overall, since the pandemic, are up about 20%. Prices in the grocery store are up about 36%.
Yikes.
That means you pushed your cart, you bought $100 worth of groceries 4 years ago. It costs you $136 today. That's real, and it impacts every American.
Yeah, definitely. So the Dow has struggled since the start of the second quarter. Does this inflation data signal any worries for investors?
Well, right now in the pre-markets, we're seeing a sell-off of about 1.25%. I think this is really about the Fed. I think that if you're an investor, you shouldn't really worry about the day-to-day. You're a long-term investor, and I know that that is the case with our viewers. But if you really think day-to-day, if you're hoping that the Fed's going to cut rates and that'll boost stock prices, I would give you an alternative scenario, and that is, what if everything went so well in the economy that the Fed didn't have to cut as aggressively? That's not the worst news.
Right. That means we're all making money and we're spending it, too.
And we do want to see the rate of inflation come down. There's no doubt. But for this moment, I feel like investors should be really taking a back seat to the day-to-day, month-to-month, even year-to-year. Most people are looking at 20, 30, 40 years in the future when they're thinking about retirement. So try not to get caught up in the days.
All right. I will listen to you as usual, Jill. Thank you very much.
Sure.